Good morning to one and all present here. I'm Mahalakshmi from Department of Commerce. Today we are going to see some information and going to share our knowledge regarding the topic lending and recovery management. It is a part of banking law and practice. So we shall move on to the topic. First, let me explain what is meant by lending and recovery management. Lending, in a sense, of course, we know, right, in banking sectors, they are providing all types of financial services like loan facilities. Rather, it can be any type of loans. In case of financial crisis, it can be for a individual person, or it can be for a business concern, or even for government sectors. Any individual or business people can go and approach all the non-banking institutions or banks. We have both public and private sector banks. Both the type of banks are offering us various types of loans on basis of interest and base of some criterias. So that is meant by lending. And recovery management, in a sense, how they are going to recover all the debts that which has been outstanding and the loans which has been given to their customers. Rather, it can be new customers or their regular customers. It can be the business people or to the government or any type of institutions, etc. Anything it can be. So first is what is going to be overall on the point of view of lending and recovery management when it comes to financial sector, especially in banking sectors. It is a role of lending the institutions. It can be banks, like private banks or public banks, which is government aided banks run by government and owned by government, or any type of non-financial institutions. They give lending money or financial services out of some interest or based on some security purposes, etc. So importance of managing the loans, how they are going to manage their set of customers and what sort of loans they are going to provide, on what basis of criteria they are going to evaluate the credit score for lending the loans, then how it is effectively going to organize their set of customers in organizing their loans and getting back their interest at the right time, and recovering the entire initial amount which is given as a loan within the particular duration of timing. So it is, if we have to effectively organize these things, or else the amount or money which is lended by all types of financial institutions and banks, it will be not recovered in the proper duration of time. So it will put the bank sectors at a total out of risk. So especially when it comes to banking services, the particular department which is working for lending, that is providing loans to customers, and the department which is working for the recovering those loans and debts should be very careful and plan out their strategies in a well efficient manner to understand the customer's mindset and to get back their loans which has been outstanding. So that is what recovery management. Then how it is going to be executed, the recovery management, how it is going to be executed, through what type of techniques or strategies, through which people we are going to follow that. Next is that what is meant by lending management overall, the process of providing loans to individuals or any type of business concern. It can be rather small scale business, or it is a startup business. It can be huge corporate companies, MNCs, or foreign based companies, anything it can be, etc. What their main objective is to safeguard all the institutions capital and minimize the default of risk. Obviously, when a business concern is going to get loan or approach loans from the banks, definitely they are having some financial issues, or balancing their capital amount, or balancing their day-to-day liquid cash. So of course, when there is a demand in cash or liquid ratios, they'll go for approaching the loans in any type of banks. Then what are their main important processes which is to be concentrated is loan origination, risk assessment, and loan disbursement and loan monitoring. Once after approaching the loans, and once the loan has been finalized to a particular business concern, first they have to look after what type of loan they have given and to whom it is given, and what is the percentage of risk they are going to face when it comes to a big business companies or any type of corporate companies, and how the loan is going to be distributed, in what ways. Either it can be after collecting all the interest for the particular month, or the entire initial amount is going to be given, and what is going to be the further process to keep on monitor those businesses regarding their payment of interest after receiving their loans till the entire duration period of time. If a loan period is going to be for 10 to 15 years, throughout the 10 to 15 years they should pay their regular interest for the loan amount, and at the end of their 15 years they should settle the entire initial loan amount toward the particular concerns. Next is the loan origination process, how it is going to be approved. It is going to be we'll be aware of the basic processes which is carried out in approaching the loans. First is we have to apply for the loans, then we'll go for a credit score verification. It is going to be a individual, they'll go for credit score where we have to satisfy a basic minimum of 6.12 till 8.2 of the credit scores as an individual also when it comes to a business concern also. So next we'll go for first the application process, then credit assessment. They'll check the credit worthiness, whether the particular individual or the business concern is capable of repaying their loans within a particular period of time, or they'll face any risks or any financial crisis in between their repayment period. Next is final step, the documentation, the verification of their original documents. If they are going to submit any type of securities or bonds or assets as their securities, they have to go through all their verification, whether it is going to be original documents and for how long period of time the assets or documents going to be within the banks or the particular concern financial institutions. You have to carry out these processes, and finally the loans will be approved to the particular individual persons, or it can be any sort of businesses. The tools which is going to be used in verifying these processes or verifying the individual persons financial situations regarding their nature of job, their salary methods, or their credit scores. They use certain type of methods like credit scoring models, risk analysis tools, then KYC, know your customers. We have to in and out know the particular details of the customer before lending loans, right? Either it can be there till up to some certain extent we have to know their personal things also, in case their personal issues should not affect at any point of time in repaying their loans within a certain period of time. Next is the risk assessment, how they are going to evaluate the risk in case of an individual for a business concern. So the risk assessment will be entirely different when it comes to an individual, and it is going to be entirely different for an companies. So the risk level will be less when it is for an individual person, for it is going to be a company, well reputed companies or a competitive companies. The risk will be uncertain and unpredictable. We couldn't to certain extent we couldn't analyze their risk at even to 1 to 2%, right? So what will be the purpose is they have to evaluate the entire, at least to some extent we should be ready to assume what are the risk we'll be facing in future. So how it will be considered is based on their credit score, what is their value of credit score, and what is their income, through what sources the income is being earned for an individual, if they have any collateral securities or they possess any assets in their name, in their own name or in the particular company's name, where so far they have availed any loans and they have repaid their loans within the repayment period of time, or they have faced any issues regarding with the banks or any other persons in such a ways. The risk classification will be in 3 cases which will be justified. First one is risky, moderate and low. In which cases we would face the heavy risks when it comes to uncertain or unpredictable sectors of businesses. Moderate and low, which will be commonly evaluated for individual persons or a normal type of businesses. Next is loan disbursement and monitoring. Then what are the collection of strategies they are going to use to recover those loans. After issuing the loans, they should keep on track the individual customers. Frequently they'll have a certain period of time. Maybe we have to pay the interest rate for every month within the first week of April or first week of May. It can be any duration of time, or particularly they'll fix a date, 10th of April. It can be anything. So but through what are the collection of strategies or what methods they are going to use for monitoring the individual persons who have got the loans, or it can be any business concern also. It can be either through letters or phone calls, even through emails or reminders, or through direct persons like agents, who in person go and approach the borrowers regarding their payment of interest within the last date of time, and reminding them to repay the initial amount. If in case if there is any increase in the interest, or the reduce in the payment period of time, they'll be let known by any type of methods. And if there going to be any negotiation between the repayment terms, like extending of the payment period, or in between clash personal misunderstandings or clashes within the banks or an individual customers, then after the repayment period is got over, and if they want any additional payment period of time, they have to get the requisition permission from the particular banks or financial concerns to extend their period to repay their loans. So some best practices or best methods which they use properly to maintain a good relationship or a communication, to fix the communication gap between the borrowers of loans and or within the banks is: first one, personalized communication. When we are going for personalized communication, definitely we can sort of many type of misunderstandings or miscommunication, or reciprocal communication of informations, rather than giving approximate and accurate informations. We can avoid false statements or false informations regarding the interest percentage or anything it can be. And we should be empathetic while maintaining the professionalism at any cost. Even the customers are going to behave rude, or they're going to be violent with the banks or the opposite persons who have come to recover their loans. At some even we have to follow, rather it can be in banks, within the banks, or it can be in any public places. Wherever places we have to follow our business etiquettes and some mannerism in what profession we are signed in to some extent. Then best practices in lending and recovery, we have to be very flexible and to be knowledgeable in using the latest technologies, and we should be wide open and honest in collecting or recovering our loans. And tools and technologies which is being used, as we know, we have already seen that we are using credit score models to evaluate the credit ratings of the personal individual, to know their credit worth of the loan facilities. Then we can use many types of risk assessment, then even SWOT analysis to know their strength, weakness, and CRM tools like customer relationship management. How far if they are the regular customers of a particular bank, they are availing any such loans at any cost. We can also go through their past reports within the what kind of relationship so far they have maintained within the banks, whether it is good, the communication with the banks is very normal and satisfied, or any type of issues they have been faced so far and they have not got rid of it, they have not found out any type of solutions for it. So in such cases, we have to go through all these things before lending a loans to a particular person, or it can be any type of businesses. Next is challenges in lending and recovery is, of course, when it is going to be a finance and money related banking sector, risk will be default. We can't predict risk at any time, at any cost. It can be in any ways we could face risk. Either it can be for banking persons also, or the borrowers also. Then leveraging of borrowers is, to some extent only we can give empathetic or concern to the customers. We should not be so much liberal to the customers when it comes to the repayment of loans, or regarding the interest payment in such cases. In recovery is that to find out the borrowers. If we are going to keep on tracking the borrowers as soon as after lending the loans in a continuous process, it will be easy for the banks to approach them at any particular time, and it will be easy for them to recover their loans as soon as possible. Then legal complexities is they should be very careful in filing the legal documents before lending the loans. They should verify all the securities, bonds which is being pledged for loan purpose, whether it is going to be original or fake documents, whether it is going to be approved by the legal government. So these verifications has to be done, and legalized procedure should be completed first before handing over the money to the borrowers. Then managing the reputation during recovery process. As we have seen, we should maintain some manners, etiquette and professionalism at any cost. Rather the risk is going to be at any extreme, or we are going to face any extreme embarrassed situation as a customer, also as a bank managers or the persons who is going to recover the loans. They have to maintain their etiquette and manners at any cost. Thank you so much.